Hi all. So welcome back to the world economy class. So today we are going to discuss on free trade and the role of trade in blocks. I'm pretty sure that we have already discussed about the trade agreements, the role of tariffs and taxes, as well as some of the non-tariff barriers in the trades, right? So today we are going to discuss on the total opposite side of that particular topic, where we are going to discuss on the free trade agreements as well as the role of the trading blocks, right? So in this lesson we are going to discuss and understand and define the term of free trade. Basically, you may have heard this term as free trade agreements between the countries, and we are going to analyze the advantages and disadvantages of free trade agreements, as well as to identify the trade blocks in UK, because we are referring to the Scottish qualifications. Because of that, we are going to discuss on the UK grounds on international trade blocks, as well as the free trade agreements, and evaluate the impact of them over the foreign trade, right? So under three aspects we are going to evaluate this relationship, where we are going to discuss on the European Union and the impact, as well as the North American free trade agreements known as NAFTA, and the Association of Southeast Asian Nations, that is called ASEAN. So we are going to discuss about these three agreements, or known as three trade blocks, in today's lesson, and to see what is the impact over the foreign trade, or let's say the foreign exchanges and things like that, right? So what do you mean by a free trade? As we discussed in our previous lessons, if there's nothing called trade barriers, or let's say non-tariff barriers or tariff barriers even, so there's a free, or let's say there's a freedom to deal with the other countries, right? So that is basically, some people are defining this as a free trade, where you don't have any restrictions among the countries to trade. But when it comes to the international trade, there are some countries where they have operated as the territories, right? Some of the territories are bound by some of the agreements, where within their countries, let's suppose as an example, let's say let's get three countries like Sri Lanka, India and Pakistan. So if we do have a free trade agreement between the countries, so there's nothing called let's say the barriers, restrictions, restraints, nothing is there. So your three countries can freely trade among your countries. Like as I said, when it comes to the free trade agreements, we can define them as the free trade as the international trade led to its natural course without any tariffs, quotas or any other restrictions. Now it's obvious where the countries which are having the free trade agreements between them are free to trade between the nations without any restrictions, without any sort of tariff or non-tariff barriers, right? See, in the presentation it says, in other words, goods and services can be bought, sold across international borders, right? So the countries, those who agreed for a free trade agreement, right? So they are not restricted in selling or buying products within the countries, so that they don't have any restrictions and there's no government influence at all, or slightly if there are, but still they are not restricting from buying or selling a product between the countries, right? So there are no any prohibitions. Okay, so we'll go further. Now in having a free trade agreement, the countries should have three conditions, where the countries must trade voluntarily, right? The countries are trade voluntary, as well as all the trading parties must benefit, right? Let's suppose that there are three countries like Sri Lanka, India and Pakistan. All the countries should have to gain a sort of a benefit, right? Without gaining benefit, it's pointless. It's pointless to do the international trades if you are not gaining any benefit, right? There should be a benefit. So without having any restrictions, like I said, when it comes to the trade agreements between the countries, of course, let's say there are some sort of import tariff barriers and things like that. Still you are having some sort of barriers between the countries, right? You can't import or export as you want, because there are so many barriers. Either if you are trying to export the commodities to the country, so that particular country will ask you for a sort of a levy or a tariff, right, where you have to pay if you are the exporter. So in some case where you try to import some of the commodities, like I said, when it comes to Sri Lanka, there's a high tariffs and levies and taxes and duties, and the things are imposed on the, especially the goods like vehicles, right? Not only the vehicles, but whatever the things that we import, if the government wants to restrict, or let's say to discourage the import, so they will impose some of the tariffs. But when it comes to the benefit of the exporting, won't be really happening if you are really paying a tariff to that particular government. As an example, let's say if the country like Sri Lanka, we manufacture apparels and we distribute apparels to other countries, like we basically export the apparels to other countries, right? In an event where we export commodities to other countries, if they're expecting a sort of let's say considering it as an import to their economy, so if they're expecting some like a tariff or a levy or a tax, right? So we cannot get the actual advantage on it, because it will be another cost to our production, right? So finally, whenever we are deciding on the prices, so we have to add that particular part into the prices, and we have to get them from that particular nation. So in that case, in some instances, the people will discourage to buy the products, or else we have to make some extra costs to export them. So that is what is happening. But in case of free trade agreements, the countries are not restricting their the party countries, let's say the adjoined countries, they can do whatever the export and import activities without any restrictions. So in that case, all the parties must be getting a benefit, right? They are getting the benefit, right? The third condition is the trade moves from the people who value them less to the people who value them the more, right? It's obvious, right? Okay, so these are the three conditions in free trade. Now, so what do you mean by free trade zones? There are some zones known as free trade zones. Basically, the countries or territories, it can be treaties where they agreed to have the trade agreements between them, are known as free trade zones, right? So they do exports, they do storing, they do logistics, they do handling, they do manufacturing, and in some cases they do assembling in that sort of free trade zones, right? These are basically, when it comes to the free trade zones, you can see most of the free trade zones are located based on their resource priority, or it can be sourcing of resources, right? If you have now let's say even a country like India wants to, or let's say a country like Japan wants to assemble their whatever the technical equipment. So we'll get China as an example, right? So if China wants to make a sort of an assembly plant in Sri Lanka, the reason is because in Sri Lanka you have the cheap labor, right? As an example, let's say if China wants to buy the labor from that particular country, let's say China or from a European country, so that would cost more than whatever they are going to spend in Sri Lanka, right? So they have to, they can easily recruit people from Sri Lanka, and they can, make a sort of a free trade agreement between the countries. Let's say they send the commodities to Sri Lanka, and the Sri Lanka will assemble them, and then they will re-export it, right? This is the free trade agreement. This is how it happens, right, between the nations. So if they are having that sort of a free trade agreement, so there are two benefits to the countries as like. So at the same time, China is having the capacity to assemble their whatever the products in Sri Lanka, since the labor is very cheap, so they could have, they can pay the whatever the salaries due in Sri Lankan plant, and they can do the things, as well as Sri Lanka is getting benefit of generating employment in Sri Lanka. So this is how it happens, right? When it comes to the free trade zones, we can say a foreign trade zone or a free trade zone is a class of special economic zone, right? In some cases this is known as special economic zones as well, known as ZES, right? So it is a geographical area where goods may be landed, right, stored, handled, manufactured or reconfigured and re-exported under specific customs regulation, and generally not subject to the customs duty. I've taken this definition from Wikipedia. So the thing is, actually there are some specific customs, right, custom regulations. There are no restrictions between the countries because they have already signed an agreement and they are having the relationship between the countries where to make that sort of a conduct, right? So those are known as the free trade zones. Okay, so what are the advantages of the free trade? Now, anyway, the free trades are always, as a rational person who has already been followed the international marketing, or let's say international trade course, when it comes to the international trade in a free way, like free trades, right, there can be negative facets as well, right? But there are positive facets as well. So what are the advantages of that free trade? Now, free trade creates production efficiencies. Now, as an example, let's say if a free trade agreement exists between India and Sri Lanka, though India do export some products to Sri Lanka, Sri Lanka may be having some of the opportunities where they would do some sort of make some production efficiencies. How can you do that, right? Production efficiencies. Now, whenever we were discussing on the comparative advantage and things like that, we discussed the countries are producing whatever which is beneficial, or let's say whatever is the most efficient for the production in their countries, right? So through that they make the production efficiencies. Now, if we are having a free trade agreement between the parties, let's say two countries, right? If we are not having the let's say some of the restrictions like tariff or non-tariff barriers, so we are always ready to export some of the products to the other country, and the production process will be continuously done, right? So we don't have any restrictions, so we can utilize whatever the resources that we have, and it will throw continually, right? We don't have any stoppages, or let's say some of the banks, no, nothing. So because of that, you can continue your process. So that creates your product efficiency. When the when it comes to the number of outputs, if the number of outputs are higher, in a comparative, when a given a period, right? So the efficiency and effectiveness and the efficiency of the operation is very high, right? So you create the production efficiencies and also increase production, right? You will create so many things as the other country accepts it, right? Without any restriction, right? So that is increased production. At the same time, you will create so many employment opportunities as well, right? And with the, because we discussed this through the scale of economy, right? So whenever the production is high, so the cost per production would be minimal. In that case, you can maintain the cost leadership in your as if you have followed the marketing in your previous cases, you know what the cost leadership is, right? Providing your product at the cheapest cost in the market, right? In that case, the customers would also get the benefit of that, because they are getting the particular product from another country at a reasonable, or let's say it is at least cost, right? Anyway, it's beneficial for them, because rather they produce them the commodities in their country, it's better to get them from another country, right? But at the same time, since they are getting the the productions without any tariffs, because we are not going to charge for any tariff by that particular government, as well as they are not, we don't want to add that particular charge of whatever the amount of tariff to the products, right? We are not going to absorb it. So there's nothing called tariff for nothing, right? So because of that, they'll be getting the product at the cheapest cost, right? So we can also maintain the cost leadership, as well as they'll be getting the product at the cheapest price. And also foreign exchange gains, right? Since we do so many types of the productions to another country, so to import them by themselves, they have to pay money for us, right? As an example, right? So in that case, we gain more of the foreign currencies. Let's suppose that we are having a foreign trade agreement, let's say the free trade agreement between USA and us. So definitely we can experience, we can, by exporting more and more commodities without any restrictions, we can gain more of the foreign sums or foreign money to our economy, right? So that is how it happens. And cause for economic growth, right? Causes for economic growth. It grows, it grows your economy, right? By, when it comes to the production possibility frontier, we can see whatever the capacity of, let's say, your capacity of production will extend further, right? Because your number of resources available or number of capital available It can be the number of capital gains that you got through you say national income, or let's say the national savings. The investments are very high, right? So you will expand the production capacity or the possibility of your productions in the long term. So your economic growth will be higher if you are having the free trade agreements between the countries. So this is a good facet of it. So what is a bad facet, right? As we all know, there are some disadvantages of implementing these free trade agreements. Now, structural unemployment through reduction of the trade barriers, right? So whenever, like I said, whenever we do export more and more, the other countries also trying to export their commodities to our country, which means that we make them as the imports, right? So we import so many things from another country, in the sense we will desperate or discourage our local infant industries, right? Infant in the sense the grooming industries, right? Developing industries. In that case, in the long run, we will create a sort of an artificial unemployment in our country, because as we all know, when the suppliers, or when the producers or the manufacturers of the local country, or the domestic economy is discouraged to produce the commodities, right, because of so many imports, right, they will discourage to promote the employment opportunities, right? In long term, the people won't be having the jobs. Because of that will create an artificial unemployment in the country, right? And mostly we can see the countries, those who are having the free trade agreements between the countries, are having economic dependency on the global market. So without, whenever we are having the restrictions, whenever having the rules, whenever we are having the barriers, we have to make some sort of, a proportion, or let's say a percentile of particular products, whatever we have taken from the other countries. We discussed this thing in our urbanization lesson, right? We discussed on, grooming the infant industries, and, always make the restrictions to, whenever we do urbanization, and whenever we do industrialization. So we are not relying on the other countries. But when it comes to the free trade agreements, of course, you can see most of the countries are depending on the other countries, let's say the productions, right? So in that case, that creates an economic dependency on the global markets, right, which is not beneficial for the local country, or known as the domestic country. And when it comes to the third point, we can see developing infant industries become less important and will find difficult to sustain. So anyway, as I said, that is very difficult to sustain when the other countries are producing more and sending them back, like importing. So whenever the country is importing more and more from the other countries, so it is unable to develop to the infant industries will be very lethargic, or let's say they were discouraged to produce their productions, right? So that will cause to market leakages, or let's say some of the people will exit from the market, right? And also leads to the pollution. Now whenever it comes to the free trade zone, the industrial zones, what happens is basically it causes for a environmental pollution, which affects over the country itself, right? And unhealthy and unbearable economic practices, because when we tend to import more and more, we will try to continue that practice which is not going to be bearable with the capacity, the economic capacity of the country, right? We have some of resources where if we are trying to import more and more, so we have to sacrifice whatever the resources that we do have, right? So like I said, when it comes to the we discussed about the exports and imports in terms, right? So terms of exports, terms of imports, right? So we see that the terms of exchange in the number of exports to the number of imports, right? So and when it comes to that, let's say the terms of trades are defined as the number of imports that we can make through number of exports, right? So when it comes to that point, we are having some sort of resources, but of course those are not sufficient at a point where we have exceed our maximum capacity to import, right? So there we have to go for unhealthy economic practices. Because of that, we have to sacrifice things, or maybe that will create a sort of a recession in the country because we don't have sufficient funds to pay over, right? It will create some inflationary situations, right? So these are very, because when it comes to the case, we don't have sufficient funds, but we have the commodities. So in that case, the people would, in not the inflations, but the recessions, right? And also unhealthy economical practices and dumping and harmful products reach to the economy, right? Some countries will try to dump their extra excess stocks to the other country under the free trade agreement because there are no restrictions, right? In that case, you will get so many of garbages into your country, right? I have to add something to you. This unhealthy, unbearable economic practices, it's not that recession, right? It should be, sorry, I meant the wrong word, right? I mentioned the wrong word. So it has to be like, it's not a recession, but it surges the economy where you don't have sufficient funds and you don't have sufficient resources to entertain, or let's say sufficient resources to buy back whatever the commodities that you take through the imports, right? And you can't restrict any imports, right? It's like you open the gate again, like you open the gate for the mass, so everything is coming to you, right? Okay, fine. So we're going to discuss about the free trade agreements which we know as the European Union, the NAFTA and ASEAN here. So we'll get to them, get to know them, right? What do you mean by an European Union? Now, European Union is basically an economical and political partnership between 28 European countries, right? Which was initially established in 1958 between the 28 European countries in the world, and it was a political and economical sort of a partnership or an agreement, right? So for the moment they are using, actually I'm just brief on these arrangements, right? Free trade arrangements to show you, right? These are known as trading blocks. So European Union, basically they are using a common currency, as you can, if you can remember, I told you about the currency changes or the fluctuations which are happening due to the the balance of the trades, right? The trade balance. So when it comes to the free trade agreements, the countries also have this is a special sort of an arrangement where the European countries, basically there are 12 different countries are using the same type of a currency known as euro, right? The reason is that because they are having a competitive currency as well, because they are comparing their exchanges with the USDs. But of course, when it comes to that, let's say if one country has used euro, so that will be compared with US dollars, right? But when it comes to the 12 countries are using the same type of a currency, so which will again makes them more stronger than it's facing with a one currency, right? Because one country, right? Because all the 12 countries are using this euro, so it will be the medium of exchange between the countries there, since they are having the free trade agreement between the countries. So that is the currency that they do deal with. So that currency won't depreciate as much, right? Because they are not going to, when the USD value is changing, euro has to change. But when it comes to the countries, like the country wise, the euro, the currency value between the 12 countries won't be differed, right? They will be the same currency, right? And that will be the same amount, that will be the same value. So they will be similar in value, right? In that case, they don't have any disbalance, or let's say any differences between the currencies. So that will create the trade easy, or let's say that will make the trade easy, so that the European Union can deal with their own countries without any hassles, right? So here that facilitates in creating freedoms in 4 aspects, right? So that is like in European Union, EU expects the free movement of goods, the free movement of capital, can be the investments as well, free movements of persons, right? That is called employments, and free movement of services, right? These are the 4 things that they focus on moving freely between the European Union countries, right? The countries which are known as the 28 countries, right? So basically, when it comes to the benefits of European Union, they create the European harmony, right? So they are having the, between these 28 countries, they make the European harmony, because after the Second World War, they made that particular territory as to sustain themselves, to mitigate the risk of again having, the critical situations like wars and things like that, because being a one territory, right? So that was the expectation of this, the EU, right? And free trade within the bloc, right? So they are having the free trade, right? They don't have any restrictions between the countries, so because of that they don't have any hassles, or let's say they don't have any limitations, right? They won't discourage to export or import, so because of that they'll be having, the free trade agreement will work. And also market access and the trade creation. Now when it comes to the market access and trade creation, it is very easy, right? They don't have anyone to put their hands onto the, there are no any invisible hands to put into the market, and they don't have any restrictions or interruptions in their trade, right? So they have easy market access. They can easily promote their whatever the products available between the countries, and they can easily buy and sell them between the countries, so they don't have any interruptions, right? And flexible economy for free movement, you can see that. And protection with the territory. Now within the territory they are having their own protection, because these are limited between the countries, right? They don't want, like, let's suppose if the country A wants leather, so the country B will produce it, right? If the country B wants fiber, the country A will produce it, right? There's nothing to worry with that, right? Because all these are, like, when it comes to the European Union, it's almost like they intend to increase their GDP as a one territory, right? It's like commonly it's like 1/3 of the total world GDP, right? If you can see, right, the figures, right? It's 1/3 of total world economy, right? So it's not a small sort of a piece, right? It's a majority. So having the protection within that particular territory, they won't allow the others to come to their countries, right? They are not willing, or they are not accepting others. Sri Lanka cannot do deal with the European Union because it's not a part of that European Union, right? So there are so many restrictions. Protection within the territory, right? They will protect their own, as well as they are protecting their own infant industries as well, right? But there's a question where, when it comes to the infant industries, we don't know whether they are very positive, or let's say they are not efficient, it seems, right? Because they do deal with their own country, right? Let's suppose Sri Lanka being a country, let's say we don't have any international accesses, and let's say we banned the internet connections as well, we banned any communications facilities, and we will be like very restricted island, right? We'll be a sort of a very island which is very lone, and let's say we don't have any connections within the other countries, and so because of that, can you think like a condition like that, where the other countries are not going to export things to our country, right? We will be limited within our resource constraints, right? And also we don't know whether our the infant industries, or let's say the developing industries, are sufficient enough or stronger enough to compete with the world, right? Without thinking about the outer world. So we'll do whatever we want, right? So that won't create you the efficient industries. That won't create you the effective, efficient, or let's say productive industries to your country. But there's a question mark, right? And also the trade protection is the final benefit that they gain from the EU. Right. The disadvantages, when it comes to disadvantages, you can see loss of benefits beyond the EU, right? They cannot gain any sort of benefits which are available outer the European Union, right? And also distortion of world trade, right? It will distort the world trade, right? You can imagine how we distort. And protection of inefficient trade through refraining the global competition. Like as I said, right? They protect inefficient trades without, they are not going to par with the global competition, without considering about the global competition, they will try to protect their own trades, but those will be inefficient, right? And also prolonged fall in GDP, right? That will be a prolonged fall in GDP. And also unemployment, because they are not going to grow their employment opportunities, because there are no any injections which are happening to the economy, right? As well as there are no any expansions which are happening in the economy. They are between themselves. So the investments are reinvested, right? They are not going to make some sort of different employment opportunities, which creates the unemployment again in a country by being so alone from the world, right? Okay, so coming to the North American Free Trade Agreement known as NAFTA, it's again between the countries, but these are different countries. When it comes to the NAFTA, these are operated between Canada, Mexico and United States, right? United States. So when it comes to that, the NAFTA was established in 1994 and was created as a American Free Trade Agreement between the USA and Mexico, and after that, sorry, USA and Canada, and after that between Canada and Mexico. And this expectation of this NAFTA is to eliminate the trade and tariff barriers between the countries, right? So you can see how it happens, how it operates. The unions or the treaties are made to reduce or to totally ignore the tariffs and trade barriers of the countries, right, between the countries, right? So there are so many objectives like promote the fair trade competition and provide adequate protection to their countries, and countries in the sense their economies, and to resolve any sort of trade disputes between the countries which are possible in trading, right? So these were the initial objectives of promoting NAFTA, right? So what are the advantages and what are the disadvantages of NAFTA? Now NAFTA has reduced the tariffs within the treaty, right? It's obvious, no, by any chance, by any condition, by any sort of a free trade agreement, they are trying to reduce the tariffs within the treaty, as well as reduction of rate of poverty in Mexican economy. That has been led to reduce the rate of poverty in the Mexican economy, as they were combined with Canada and United States, which are known as well-developed countries, right? So that reduced the poverty in the Mexican economy, since they have made the economical boosts and economical injections into that particular economy, and they expanded their production capacity. And also increases in market access and profits potential. Now since they are merged, they are having the international market access to the US economy, Mexican economy and Canadian. Especially when it comes to the Mexican economy, they do have the access to both the Canadian and United States economy, right? So this will create a sort of an increase in market access as well as the profits, right? Right. But when it comes to the bad facet of it, you can see increase in productivity and growth is not so high. But as they were expected, that was not so high when it comes to the aspects of the productivity, right? Because there were some of the economies were trying to now. Obviously, when it comes to the Mexican economy, they were trying to rely on the Canadian and US economies rather they do perform, right? They actually, of course, because of the free trade zones, they lost their poverty. They were able to reduce their poverty. But when it comes to that, mostly the countries were trying to rely on the funds and the things on the North American, or let's say the United States and Canada, and no such improvements in level of employment, right? They created employment level, the employment opportunities, but they were not as such as expected, right? And also many Canadians and Mexicans migrated to USA, right? Canadians and Mexicans, now previously whenever they didn't have this type of an agreement, they did have, they had a sort of a restriction between the countries of migration, right? Nowadays we see most of the United States issuing green cards and things like the American lotteries and green cards and things like that. But when it comes to Canadian, Mexican and USA, this merge, right, we called it as NAFTA, you don't have any restrictions between countries, right? So for the purpose of even to have a sort of a visit, you can go, right? By adding a business purpose, you can visit the countries between the countries, right? So many of the Canadian and Mexicans were trying to, and they were migrated to USA without any restriction. Nowadays it's happening also, right? So we'll move to ASEAN, right? ASEAN or ASEAN is known as the Association of Southeast Asian Nations, right? So that was established in 1964 as a regional intergovernmental organization of Southeast Asia, and it has so many members now, especially Brunei, Cambodia, Indonesia, Laos, Malaysia, Myanmar, Philippines, Singapore, Thailand and Vietnam are the members of this Asian community. And they were, the intergovernmental cooperation was to facilitate the economic growth, political growth, make the economic security, as well as to empower the military actions, as well as to improve the educational improvements, and to make the social integration. Those were the basic expectations or the basic preliminary objectives of these ASEAN, right? When it comes to the ASEAN's objectives, you can see they were expected to accelerate the economic growth, as I said, promote the regional peace and stability, so that is what we mentioned as the military activities, and to promote the tourism, increase the food production, because they are being, if you have noticed, Brunei, Cambodia, Indonesia, Laos, Malaysia, Myanmar, Philippines, Singapore, other than Singapore, Thailand and Vietnam, right? All these countries are having agricultural based economies, right? Basically they had in earlier cases, right? Now it's similarly, when it comes to the previous case and today's, but it's comparatively less now. But when it comes to the countries like Brunei, Cambodia, Indonesia, like these countries, they had agriculture majored economies, right? Even nowadays, even they do produce rice. They have agricultural, the paddy farms and things like that. So that is to increase the food production, because they know with their land capacity, with their cultivation capacity, with their agricultural capacity, they have the possibility of increasing food production. So that is what they wanted to do, and enhance the mass media through cooperation. Now when it comes to the mass media, it's a quite good platform, because the people are interconnected, and you can the IT literacy was not that high as when it comes to USA, Canada, Australia, like that. But that is one of the objectives of the ASEAN, to enhance the mass media through the cooperation in these countries, right? Like I said, right? So these are the things that I wanted to discuss you today. Hope that you understood everything well, and thank you very much for being online.